Hi all, welcome to EduConnect. Today we are going to discuss about the UAE's value added tax. So this would be the first class. So we will try to learn something very basic. Okay, so as the name, we are going to learn the meaning of the name value added tax. So what do you mean by value added tax? Okay, so value added tax, as you might be knowing, income tax you might have heard about it. So income tax means what? Tax on income. Whatever income you earn, you have to pay tax on that. Okay, same way gift tax, as the name suggests, it is a tax on the gift. Similar way, if you use that method to define this term value added tax, then it is simply a tax on value added, or I would say rather tax on value addition. Whatever value addition you make on your product you purchased, on that value or that addition is known as what? Value addition. Okay, so that addition would be treated as value addition. So I would simply say the value addition, we can call it as profit. So this value added, I will simply say what? Profit added. Profit added to what? Profit added to the cost. Profit added to the cost. So that would be the meaning of a value addition. So I would like to expand the concept of value addition with a simple example. Okay, so let's move on to a wonderful example, a simple example, so you can learn the term value added. Okay, so suppose there is a supplier called Mr. A. Okay, there is a supplier called Mr. A, and this supplier Mr. A purchases. Okay, he purchases. So he purchases something, for example, 100 dirhams. Okay, he purchases for 100 dirhams. Okay, so on this purchase, he has to pay VAT also, correct? So he pay VAT. But you may be knowing it's 5% in UAE. So VAT at 5%, if you charge, it would come to 5 dirhams. So total you will have to pay 105 to the supplier. Okay, so now if you're selling this product, okay, now I am talking about the sales. Mr. A sells this product, for example, he purchased for 100 dirhams, so he will add some profit to it and he is selling it for 120, and he will, when he is selling, he will charge VAT, and the VAT amount you will collect it from the customer. So VAT at 5%, it would come to 6 dirhams. So total the invoice amount, the bill amount would be 126. So you will be charging a total of 126, including the VAT amount of 6 dirhams. So if you, when you are going to file the VAT return, how much do you have to pay to the government? Not the full 6 dirhams. The government says you already paid for the same product, you already paid 5 dirhams, correct? When you are purchasing, when you purchase the product, you already paid 5 dirhams. You already paid 5 dirhams, correct? Same product you are selling, again the government is charging 6 dirhams. So total if you do, it would come to 5 plus 6, 11 dirhams. So that is not a logical thing, because if you will do like that, it would be a double taxation on the same product, 2 times tax. It won't be coming at all. So what happens is the government says you already paid 5 dirhams on your purchase for the same product. Now when you are collecting some amount from your customer, that is 6 dirhams here, so what you have to do is you collect 6 dirhams completely, but you can claim a deduction of this 5 dirhams, okay, whatever you paid already, that you can take it back from what, from this collected amount, okay, from this collected amount of 6 dirham you take back whatever you paid from your pocket, this 5 dirhams, and pay the rest, okay. So how would it be? So VAT payable, if we calculate, VAT payable would be how much? 6 dirhams minus 5, so it would be a total of 1 dirham. So this 1 dirham you have to pay to the government, you have to pay to the government, okay. The government department, for the taxation purpose here it is called FTA, so you have to pay to the FTA 1 dirham. So till now I just described you how the process of purchase, sales, and the VAT calculation works, okay. Now I would like to invite your attention to the concept, okay. The same example you have to note down, okay. Now we got here 1 dirham VAT liability, VAT payable, okay. Now what I would like to do here, I will erase this, okay, and I will erase this also, okay. Now you tell me, as you can see, you purchased for 100 dirhams, you sold it for 120, so can you tell me what is the profit you added? Mr. A added some profit, right? So on the 100 dirhams, the Mr. A added a 20 profit. That's why he sold it for 120. So as you can see, the difference is known as what? Profit. Profit is how much? 20 dirhams. Okay. This is the profit added. I would like to say that. Profit added. If you added a profit of 20 dirhams, correct? You added a profit of 20 dirhams. Now you calculate VAT on this profit. How much? 20 profit into 5% is the VAT rate. So you will get the same 1 dirham as you got it here. The same 1 dirham you will get from the this calculation also. So if you calculate VAT on profit, then also you will get the same amount of 1 dirham. So I use the term here VAT on profit. Instead of profit, I can use what? Value added. So it will be a VAT on value added. That's why the term value added tax came. Okay, this is the relevance of this term. You pay tax only on the value addition you make, only on the profit you add to your goods and services you purchased from the supplier. Okay, so this is the basic concept, and you should understand this concept for the further learning process. Okay, so I would like to wind up here. Okay, I would like to meet you with another new video. Okay, bye. Thank you all.